Alright, it's been about a week, and dude, I don't know why. Like, I post these videos, I'm talking to myself, and I still feel that by taking a week off, that like someone's waiting for me. When I know in reality, this view or video will probably get 0 views. But, anyways, enough ranting. Listen, here's the news drivers for the week. This is what I'm looking at currently, and in terms of articulating my thoughts on price, here we are. We're gonna keep it brief. Bullish on NQ. No reason to expect lower prices. Same applies for ES. On a more refined weekly time frame, here's the idea. Bullish, okay, on ES, bullish on NQ. And we are at a historical high, so we're keeping that in mind as well. And I'll elaborate on some of these ideas in a moment. But the biggest one that I want to cover on here on the weekly is just the bias and where I'm expecting price to go. All right, keeping in mind that we are extremely overbought at a historical high, and between here and here, right, we are in a deep premium above an old high. All right, so we're keeping that in mind, and both of the same concept applies for both NQ and ES. So now the next steps. All right, I updated my look back and look forward. All right, so we look 20 days back. Any lows and highs we can note as short-term highs and short-term lows. Right, so this could be noted as a short-term low. All right, and then I forget exactly. I'm gonna have to look at my notes. I forget it goes like short-term, intermediate, and then I want to say long-term, but I don't think that's what the word. I'll have to find out exactly, but I know it's short-term. Did I maybe? No, I didn't. Okay, that's fine. Anyways, listen, we'd be looking for lows and highs in a past, even though I don't know the names, past 20, 40, and 60 days. The most relevant low in the last 20 days is here. Okay. Most relevant high, last 20 days. It's here, but it's already been taken. We're at a historical high. Right. In the last 40 days, it's the most recent low. It's just outside 40 days. So if you really wanted to get technical here, but I would say this low here, 60 days, right? 60-day low. There's no real 60-day low besides this one, and that was violated here. And this is when we were seeing a sell model before the shift in market structure. 1, 2, 3 months. Okay, listen, from here, all right, this is the start of August, September, October, created a low in November, and watch it proceed. Now, we'll focus on this in just a moment, but here's the idea. This took 3 months to unfold, and every 3 to 4 months we expect or anticipate a shift in market structure. Now here, okay, this is something that you could have definitely sought this out before it happened, and the reason I'm saying that is with expecting that shift and just looking at where we were, stopping right before premium and leaving this high intact, right, there's a massive amount of what's known as open interest above that. And open interest is not simply, just defined by like an all-time high or low, but we look at our data ranges, and generally any high or low outside of our data range, price will have a impulse to gravitate towards the open interest because there's an insane amount of liquidity above those untested highs and lows in the form of stops, right? And so smart money will look to pair their orders with those stops resting above old highs and lows. So simply put, all I'm looking at here is 20, 40, and 60 days. Here's where the most recent shift happened. So that was 40 days ago from January 1st, all right? That's what I have delineated here. And I know how he said calibrate it, but I know I'm going to have to adjust it in like another 10 days. And honestly, I can't be bothered, especially because it's the same thing, right? Like I would just be moving it again. But anyways, 20, 40, 60 days, okay? So in terms of that, right, this is where the last shift happened. It happened 40 days ago. All right, now when we look at our cast forward, okay, we're getting to about the time every 3 to 4 months we expect a shift in structure. So we are leaning into that time. We're above a historical high, creating historical highs, and honestly, we'll break down price action from last week, but you can see this very sideways price action. This is very reminiscent of the turtle soup pattern, or price, trading above an old high, not necessarily trading aggressively, to accumulate or distribute their positions, which they're not going to do all at once. But we know that smart money likes to sell above old highs and buy below old lows, and then they will look to liquidate or close their position out at a old order block, right? So they like to buy the external range liquidity, okay? Or I think I'm actually saying this completely wrong. Sorry. Whew. Thank God I'm sitting here talking about it. All right. So they like to get in internal range liquidity. That's what I meant to say. That would be like an order block, right? And then when they buy in a form of internal range liquidity, or that when they buy that order block, they want to distribute their positions at an old high or old low. So that's what I was actually meaning to say. I almost fucked it up, but anyways, listen, that's kind of the reason I'm sitting here, to articulate this stuff. So yeah. But anyways, the point I'm making overall in the grand scheme of things is that I am currently expecting a shift, since it has been 3 months in a primarily dominant bullish uptrend, and every 3 to 4 months in a long-term position trading perspective, we expect some form or shift in market structure. So that's what I'm expecting now. All right. How about NQ? It's the same idea. So with that in mind, not much has changed on my higher time frame chart, higher time frame being my daily chart and lower. And really what I've been notating on this chart is what I'm seeing in terms of like key highs and lows. All right. So when we look at here, okay, this is that level I'm on tested buy side. You can see price just, coming up. Okay, take these buy stops out. Guarantee we'll see price go for this low and this low now that all buy stops have been wiped out. We don't know how long price is going to consolidate, but if you look here, each candle represents a day. This is very sideways price action. It's low, take low, high, take high, right? And this initially was an idea I expected. Okay, high, higher high, low in between, aggressive run below it, and then price actually trades through that, okay? And the reason price trades through that is we are still in a buy program, but if we are in like a seek and destroy condition or consolidation, we'll see price whipsaw between high to high and so on until it makes its eventual shift in structure. Now we'll continue focusing on this, but it's good to note that from consolidation moves into expansion. And then we have these lows here, this low here, right? Noted levels where we saw quick movement, right? In terms of sell side, there's really not much to say. We have this old low, right? But we've obviously moved into a position in the market where we're extremely overbought. So that's like the main takeaway here. So to clarify on higher time frames, right? I'm expecting price to continue moving higher. When we get into these lower time frames, such as a daily, all right, on the daily, I'm expecting the same thing, but I'm keeping in mind that we are above a historical high and that price may be consolidating. And I'm not getting caught up in the noise with that, right? So in terms of a 4 hour, now we get more noise, but it's slightly more refined, right? So here's where it really becomes apparent. Relative equal high, price running those highs, okay? Low, low here, sell side was taken, failure swing, not a actual failure swing, but, well, I guess you could consider that a failure swing, but really this is a high with a lower high to the right. So essentially this showed weakness, but really it's just consolidating, and right as it retraces back into this inefficient range where price was delivered on one side of the market, right, it trades into that, rebalance of the range from this wick to this wick. All right, after that range has been rebalanced, then that's when we see price reaction to the upside, Y to the upside, to take these buy stops. Okay, so that is the ultimate order flow that we've seen price go in. Now keep in mind, everyone's selling here. Okay, when price started moving up here and people were shorting, okay, these people that were shorting here got stuck in the market as price began to rally. Price comes back down here to allow them to mitigate their positions and re-enter on the right side of the market, because those who were selling here were on the wrong side of the market. And what does it do after? It then targets the buy stops. Okay, and are we at a historical high? Is there any high higher than this current price action? No. So that's why I'm reasonably expecting price to move back into a discount. We're extremely overbought, and I've been saying this for a while, but it's not just a matter of overbought. It's just keeping in mind where prices came from, anticipating that quarterly shift, and that's the idea right now. Now, a lot of the higher time frame ideas aren't going to transpose to these, because for position trading, I want to be looking at these time frames. But what I am doing is from a daily and lower, because a daily is going to be the noisiest one we have. When we go to a 4 hour, we're just more and more refining this, okay? And so it's the same thing in terms of here. When you look at it here on a 1 hour, and you look at it like this, right, it really does look like a consolidation, right? It looks like low form, low taken, high form, failure swing, right? Probably tricking traders into thinking that this is a level of resistance, that, and what does price do? It runs through it. But why is price running through this, right? Well, price is running through this because, first of all, I just want to mention, like, if I enter this as a failure swing, okay? Like, if, say, I'm like, okay, yeah, this is a failure swing right here. We have a high, right? A, lower high, okay? Firstly, we don't have the condition to be looking for, like, any sort of entry. But the second thing is, it's not even a good setup because of the fact that we run buy side, okay? So what this indicates to us is that price is consolidating. It gives us a more thorough idea. And if we see price then go for this low and this low, linger around and then continue higher, then we can also look for that. But we need to keep in mind where we are in time, because it's time then price, okay? And we are in an area of time where we can reasonably expect price to move from this premium to some of our discount levels, such as the low that was created last week, the low that was created about 2 weeks ago, towards Friday of that week, right? All these lows remain untested from here. And we see price continuing higher, but it continues higher for these buy stops after price ran through these sell stops here, right? And so then that tripped people into thinking that this is the ultimate high, and of course it runs out the buy stops, which was something I mentioned in a previous video. I believe I said that there is buy stops here in the form of, people thinking that this is going to be the highest high. So they put their stops here. They see price start to go down. It starts going in their favor. They put their stop here, and they get stopped out. And this is why it's important to keep in mind the institutional swing points, which is a breaker and a failure swing, okay? Those are the 2 points that you will see an institutional swing point. And in terms of like what we would look for, right, we have a high, right, and then we have a higher high. So we have a low in the middle, draw it out, okay? And we're doing this at an old high or an old level of support or resistance that we'd be expecting price to move from after it took the buy stops, not as soon as it got to the level. But anyways, high, higher high, low in between, okay? Trades through that low, okay? Retrades it, activates it, but then completely would stop us out. Good, because we wouldn't even want to be in that setup, because now look where prices have gone. So if, say, I enter this, there's multiple reasons that's flawed. Firstly, we need more information. We need to see what price is going to do, because while I can continue to say every day, I can sit here and I can say, oh yeah, I expect higher prices, right? Ultimately, I'm demanding more information because I understand we're at a historical high. Okay, I understand that every 3 to 4 months there's a shift. I understand when we look at time, then price, that shift is near. And when we look at price, we can still see it, creating higher lows or in a buy program. Now, if this is a consolidation, we can also keep in mind that price is only going to move from consolidation to expansion, and with us being at a historical high, if we consolidate at a historical high, I believe that it would be likely to expect price to move into a discount based on that. All right, so simply put, a lot of these lower time frames is not what I'm studying right now. I'm studying specifically the higher time frames, and that's where I'm going to start. That's where my development will begin. In terms of just position trading, which I want to know how to do each model or each style of trading. And position trading based on what's been explained. I believe I could make money with it. I don't think it's the personal trading methodology or mythology or mentality that I will encompass, but I will only know by doing. So maybe I like this more, but we'll only know by doing it. So anyways, when you get down onto the 15-minute, let me actually go to my lower time frame. All right, and on the 15-minute, dude, there was so much noise on my chart, bro. I had hundreds of drawings. I had to clear it out, right? So it's really not as intense as it used to be. But listen, all I'm doing is marking the highs and lows on the 15-minute. All right, and so I just wanted to quickly, before I close this off, since it is 1:35 a.m., I just wanted to quickly note that last week we saw a low form on Wednesday, and the high ultimately formed on Friday. All right, and the low was simply retrading here because all the traders went short here, got trapped in when price started moving here. It showed weakness, and the weakness it showed was to move back to that level, okay, to allow traders to mitigate or close their positions and re-enter on the right side of the market. When the algorithm traded down here, that's when we saw price close out. And now we have Monday starting in a consolidation, right? So that's what I'm noting last week. Quick movement here, of course, old low here, old low here, old low here. Keeping in mind that we're most likely consolidating, but still keeping in mind the underlying bias, which is that we are in a buy model or we're expecting higher prices until price shows us an indication of otherwise, which the only indication it's currently showing is that it would like to consolidate. So I'm going to continue monitoring price, and what I'm doing this week is I'm gonna start the next month of the core content because I only have around 4 more months. Like there's a total of 6 months, but the last two should be pretty simple. They're like 4 videos each. So I only have really 4 more months, but I'm going through my notes right now, and I'm back through I think month 5. So really, all I learned or relearned, I have to rehash. It's very important for me, but I was learning about open float, interest, and or liquidity in terms of outside of the 30 and or 20, 40, and 60-day markers, right? Any high or low outside that period has a lot of open interest in the form of stops, and so we can expect price to gravitate towards those levels. I've also, redefined kind of like the range, or not range, but I've learned again about if the data ranges and refining my understanding of that currently. And outside of open float, that was something that was bugging me. Like I didn't understand that. So, anyways, like pretty much outside of everything I've gone over, there's really like not much yet. I'm going to elaborate more on these ideas as I develop in my own progression. So we're going to leave it there. And yeah, peace.